In the beginning of July, we also discovered the DeSantis administration wrongly declared some out-of-state driver's licenses invalid. First, we confirmed an error in invalidating licenses from Vermont, and then Rhode Island, and then Hawaii. And each time, as we discovered problems and asked the state to respond, the state backtracked and changed policy. This goes back to the new Florida law invalidating certain classes of out-of-state licenses, but only if they're issued exclusively to undocumented immigrants. See, if citizens can also get the same kind of license, by law, the state cannot deem them invalid. And yet the state flagged licenses available to undocumented immigrants and legal citizens alike, and then changed course after we started asking questions, and then stopped responding to our emails asking what caused the errors. Now, we don't know what type of error we'll find next, but consumer watchdogs fear state lawmakers could have made one on home insurance.
The laws that we change dramatically change the litigation environment we have in the state.
The state leaders blame soaring home insurance rates and company failures largely on abusive lawsuits.
Florida's burdens of litigation and the attorneys making so much money.
And they repeat the same stat to justify their premise.
We have about 8% of the insurance claims for homeowners nationwide. The state represents 78% of all the litigation.
Now, for context, that stat came from former state insurance commissioner David Altmaier, based in part on confidential data and data that excluded states in some markets, and that former insurance regulator and economist and consumer watchdog Bernie Birnbaum says lacks context.
There certainly was more litigation among certain companies in Florida than you'd find in other states, but over half of the companies had very little or no litigation.
What does that tell you?
It says that it's not an industry-wide problem.
That possibly a state like Florida with a different mix of insurance companies may have a comparatively small number of them getting disproportionately sued, possibly for slow walking and lowballing claims. Also, there are some other stats state leaders don't generally cite that provide more context in terms of litigation costs.
Florida did have a higher claim settlement expense ratio of 13 cents on the dollar, but it was only 3.5 cents greater than the countrywide average of 9.5 cents.
Now, putting aside the reason for the difference could be because of unfair claim settlement practices, here's what those stats could suggest.
The cost of the so-called frivolous, and I put that in quotes, litigation is a few pennies of the premium dollar, nothing of the magnitude to drive the premium increases that we've seen.
And yet our state leaders responded to the crisis by making it harder to sue insurance companies. And as rates continue to skyrocket and companies continue to fail or leave Florida, the governor and legislative leaders say we need more time for their lawsuit reforms to deliver results. All while the national analysis from AM Best does not list litigation as a factor in insurance company failures. And this report from the Florida CFO on recent insurance failures in our state does not list litigation as a factor. And the most recent insolvency report on the CFO's site does not mention litigation either. It states, based on a review of its history and practices, the cause of Sawgrass's insolvency appears to stem from mismanagement and a lack of funds.
One of the things I'm very concerned about is this company had no financial exams from the state of Florida since 2011. And I'm wondering if maybe more effective oversight, I'm actually confident that more effective oversight would have helped to avoid this disaster.
Well, that would suggest the problem might not relate to lawsuits as much as lapses in state leadership, which in different ways we've seen a time or two before in years past.